This research report tells you the best way to earn passive income with crypto lending. We've been working on this report for a few weeks because there's a problem. There are just too many options. There are far too many sites and coins to potentially lend out, and there's no one resource that gives the whole picture. So I've decided to take matters into my own hands. Let's rank the top crypto lending sites by average rates offered and coins lent out, because this matters. Don't believe me? Let me show you. Let's say you're lending out $10,000 for 20 years. At 8% interest, you would have $49,000 after 20 years. At 10% interest, you would have $73,000, 49% more profit on 2% additional interest. Now, do we know what crypto lending rates will be in 20 years? Absolutely not. But the last thing you want to do is look back 20 years from now wishing that you would have just watched all the way through that 10-minute YouTube video on lending. This video has some regular old crypto lending like Bitcoin and Ethereum, but the primary focus is on stablecoin lending because this is where you can earn sometimes as high as 50% interest passively. Now, before we get into the data, we need to cover the types of stablecoins that we're looking at because it's important to be able to differentiate which one is best for you. The first type of stablecoin is fiat collateralized. This is the most common type and for good reasons. Generally, you want a stablecoin to act like a dollar and be stable as, a dollar. So it makes sense to back a stablecoin one-to-one with a dollar. So here's how it's generally supposed to work. You have $100 in fiat that you want to trade for a stablecoin. You go ahead and make the trade. Your US dollars go into the stablecoin's reserve, and then they mint $100 in stablecoin tokens that they give to you. When you sell, the opposite is supposed to happen. They send you the US dollars back, and they burn the $100 in extra tokens, keeping everything equal. Now, I say supposed to because the biggest stablecoin of them all, Tether, has some major concerns in the past with proving that they actually have 100% US dollar reserves for every Tether token issued. They do have an audit from February showing that they hold adequate reserves. However, many feel that there's much more to this story. So much so that there's currently a $1 million bounty for any information leading to a discovery on Tether's true reserves. Now, one thing we do know is Tether holds a lot of commercial paper instead of just cash in their reserves. Commercial paper is basically a form of short-term debt. Now, this is okay, except we don't know who they're lending it to. The problem is Tether is by far the largest stablecoin, and they have the most options and best lending rates on platforms despite all of these concerns, so it's something you need to consider. Some people will say they will never use Tether, and others think it's safe enough. No matter where you stand on this issue, I'm going to give you options for a variety of stablecoins. That way you can choose the one that works best for you. The next is BUSD. BUSD is Binance's stablecoin, which is facilitated by Paxos. Paxos goes above and beyond to show that they have proper reserves in place for their stablecoins issued. They release a third-party audited reserve report every single month. On here, you can see their dollars in the bank versus tokens issued. $922 million in reserves and 922 million tokens issued. The third collateralized option on the list that we'll be examining today is USDC. USDC is a joint venture between Coinbase and Circle. They also have third-party audit reports done on a monthly basis, which you can find on their website, and this will show you exactly what is in their reserves and the total tokens issued. As of the last audit, they have $32 billion in reserves and 32 billion tokens issued. And finally, we're going to include a crypto-backed stablecoin in our research. These work a little bit differently. So the first three tokens, USDT, USDC, and GUSD, were backed by US dollars in a centralized reserve. Maker is much more decentralized and backed by a variety of other crypto tokens. It's decentralized because DAI is facilitated by a smart contract where you can deposit a crypto like Ethereum or the comp token and receive DAI in return. To protect reserves against volatility, DAI is actually over-collateralized, meaning that they have more money in their reserves than tokens floating around. For example, if you wanted $100 in DAI, you would have to put up $150 in Ethereum as collateral. So now that you have more context on the stablecoins that we're going to cover, you can decide the coin and the method of investing that you'd like to use as we go through our data. The first platform on the list is YearnFinance. Yearn is a DeFi platform built on Ethereum that allows you to earn interest on your cryptos without a financial middleman. Here are Yearn's average lending rates. 1.08% for USDT, 3.85% for USDC, and 3.57% for DAI. Now, a point here that I want to make is this report is going off of 30-day average rates. Some of these were actually recorded by hand. But if you go on Yearn or any of these sites and interest rates are slightly different, that's because market conditions can change and these rates tend to fluctuate depending on the exchange or the platform that you're looking at. My main goal here is to find out who is consistently best. Now we have Coinbase. Coinbase is the most famous on the list, but far from the highest rates. You're paying for that user-friendly interface. Coinbase offers 4% interest on USDC and 2% interest on DAI. The next platform is Compound. Compound is an algorithmic DeFi protocol built on Ethereum. They allow a variety of ways to earn interest on your crypto, again without a middleman. But just how much can they make you? With USDT, 6.81%, USDC, 5.74%, and DAI, 3.33%. Next up, we have dYdX. Now, my broken sense of humor always wants to just go ahead and pronounce this as Dix, but I'm pretty sure that they're brainiacs and this is named after a derivative function, not, the organ. Anyways, dYdX is another decentralized platform built on Ethereum with lending capabilities. Their USDT rates are 6.81%, USDC 5.74%, and DAI 3.33%. Next up, we have Blockfi. Now, you might be familiar with this as they're a sponsor of mine. Blockfi is interesting because they focus their efforts on making earning interest on your crypto as easy as humanly possible. They're attempting to bridge the gap between crypto and old school banking. Here, you're not going to see the absolute highest rates possible, but the user experience is the best of any platform I've used on this list, so there is a kind of balance and decision to be made there. If you do want to try them out, I'll have a link in the description where you can get $250 in free Bitcoin by making an account. Now on to their rates. USDT lending, 7.5%, USDC, 7.5%, BUSD, 7.5%, and DAI 8.5%. Next up, we have Nexo.io. Nexo is a crypto wallet that allows you to store digital assets, exchange them, and earn interest. They're fairly large with 2.5 million users. But how much do they pay? USDT, 8%, USDC, 8%, and DAI, 8%. We're starting to get up there. 8% is the average returns for the S&P 500, so not too shabby. If you had $100,000 lent out at 10% for 40 years, you would be looking at $5.3 million in your retirement. But let's keep going, because next we have Venus. I actually wasn't familiar with Venus until starting research on this video, and Venus is a decentralized platform for lending and staking built on the Binance Smart Chain. Now, show me those rates. Show me the money! USDT, 10.63%, USDC 15.53%, DAI 11.12%, and GUSD 14.19%. Side note, they also offer some attractive lending rates for Cardano at 11.12%. Also, if you want to earn passive income on your Cardano that's risk-free, because lending, I guess, isn't 100% risk-free, you can stake your Cardano for about 5% annual interest. And if you would like to stake your Cardano in my stake pool, I would appreciate it, and you'll earn some passive income. All you have to do is delegate to ticker symbol MAX1, or if you want more information on how the pool is run and everything we do in the background, or the charity that we donate to, you can visit stakewithmax.com. Now, next on our passive income pyramid, we have Crypto.com. Crypto.com is a full-scale exchange with lending capabilities on a variety of stablecoins and classic cryptos. Now, here are their rates. USDT, USDC, and DAI, all 12% annualized. GUSD, 3%. Also, both Bitcoin and Ethereum lending is 6.5% on their site. Now we're on the final stretch here. Next up, we have another platform that I hadn't heard of until the research for this video, and that is YouHodler.com. They offer crypto swaps, crypto loans, which can actually be really nice if you have a ton of crypto gains and you're trying to avoid some capital gains tax. You can just simply lend against your stack. You never have to pay capital gains. And of course, they offer regular old lending where you can earn some passive income. But what are their rates? USDT, 12.3%, USDC, 12%, and DAI, 12%. Not too shabby. Moving on from here is one that you're likely familiar with if you've been watching this channel for a while, and that is Kucoin. I've personally used Kucoin to lend out stablecoins for about 7 months now. In that time, I have personally made $21,000 in interest. That comes out to $104 every single day since I started. But what are their average rates? This was actually one of the tougher platforms to get data from, but the average lending rate that we found is 15.33% for USDT, crazy, and 10.95% for USDC. Now, I can say from my experience that this seems correct. I've seen lending rates on that platform as high as 75% APY and as low as 5%, but neither of those lasted very long. The rates on Kucoin are determined by a free market and what people are willing to pay. So what you'll see is when cryptos are pumping and doing especially well, then lending rates go through the roof. And when crypto is dropping, which happens sometimes, then lending rates drop significantly as well. Also, I will have Kucoin linked in the description where you can save on trading fees if you want to go ahead and try out that platform. Now to the last member on this list, and that is Fulcrum. Fulcrum is a trading, lending, staking, and borrowing platform. They're similar to Kucoin in that 10% of your lending profits go to an insurance fund to ensure that you don't get stuck in a bad loan. And their rates, I'm glad you asked. USDC, 9.81%. DAI, 3.43%. And USDT, 16.19%, just beating out Kucoin. If you were to invest $100,000 at 16.19% for 40 years, you would end up with $62 million. But again, we don't know how long these rates will stay that high. Now let's do a summary. The winner of this race really depends on which stablecoin you want to go with. If you're okay with USDT, which is the highest maximum rate of any coin here, then Fulcrum or Kucoin may be your best choice. If you want to go with USDC, then Venus is the standout winner at 15.7%, followed by a tie between Crypto.com and YouHodler. For BUSD, Venus wins again, significantly ahead of the others, and DAI is a tie between Crypto.com and YouHodler at a healthy 12%. And there you have it, the best possible lending rates on the web. If you enjoyed this breakdown, consider hitting the subscribe button because videos like this take so much time and effort to make, and I would appreciate it. Now, just like to thank you so much for watching, and I hope you have a profitable day.